Hello everyone, this is the Crypto Cowboy and welcome to Elliott Wave Cafe, a premier hangout place for traders and investors, a place where you will discover and learn to identify market opportunities, become a stronger trader, and a more experienced analyst. This is the first video in a long series of videos that are geared towards a better understanding of the wave principle and his applicability in the markets. So I made this quick introduction because up in our Telegram platform, I will open a new channel that's going to be called the Elliott Wave Cafe, and I will regularly post videos about the Elliott Wave principle. I will present detailed explanation about the markets, and we will follow with complete market updates and regular lessons about the Elliott Wave principle. This video, it is posted on YouTube, and it will be the only one that will kind of refer to the Elliott Wave principle in general. And let's get started. I have a few slides here. I'm going to take you through the basics of the Elliott Wave principle. We're going to look at some basic concepts and practical application. We're going to look at the structure of the waves, and then I will give you a few examples. All right, so before I move on, I wanted to say that most of the comments that I have in the notes that I have in this short presentations are based on the Elliott Wave principle, and this is a famous book by Frost and Proctor, and it was published, the original edition was published in 1978. I suggest and recommend to everybody to look at this book, and it is considered kind of the Bible of the Elliott Wave analysis, and there's a ton of information, there's a ton of details, and by studying this book over and over and over, along with looking at the markets, you will become a very strong trader. All right, so I want to give them an introduction, and hopefully, a lot of you guys are familiar with this book. But again, go ahead and read it, and you will find out a lot of good information. So the basic structure of the Elliott Wave, it's 5 waves up and 3 waves down, and this is how the markets move. We progress and then we regress based on these patterns, and everything else relates to this basic equation, this basic rule. If you know how to count to 5, and if you know your ABCs, you should be able to learn the Elliott Wave. It's not complicated at all. All right, so let's start by looking at the basic concepts, and I'm going to just give you a little bit of history, and we need to know where everything started so we can understand what everything means. So Ralph Nelson Elliott was basically a famous accountant, and he was born in the 80s, in the 1880s, 1870s, and he worked as an accountant, and most of his work was at some railroads in Mexico and Central America for a good part of his life. I think he was in between 1880s and 1890s, and then he came back to the United States. He worked a while for the United States government, to the Department of State, and then he got deployed to Nicaragua, where he worked as a main head accountant for that country back when the United States were involved in Nicaragua. So then he retires at about 58 years old, and he gets a pretty bad disease, and he moves back to the United States, and I think he moves into California, and then between 1930s and 1938 he starts to study the markets pretty aggressively, and he plots on paper half-hour charts and 1-hour charts of the Dow Jones Industrials, and then he starts to notice repetitive patterns into the markets, and he writes his writings, and reaches out to this guy Collins, and starts writing for his newsletter, he starts to be more and more involved, and writes his findings basically into this new book that's called the Wave Principle. And basically he discovers that the patterns are repetitive in form, but not necessarily in time and amplitude. So the waves are kind of similar. They're moving into the same patterns. Some waves are longer in time, or they're longer in price, but in terms of form they're almost the same. And so he writes the Elliott Wave Principle as a nice book, and then he moves. He writes for various publications, and then he ends up writing Nature's Law, which is his most famous book, Secret of the Universe, in 1946, and then he dies a couple of years later in 1948. So everything started with Ralph Nelson Elliott, and then his findings and his studies are picked up later by A.J. Frost, and by Robert Prechter back when he was working at Merrill Lynch, and they write this famous book, Elliott Wave Principle. So if you want to find out more, there's plenty of information on the internet. You can read into the book, but basically this is how everything started. It is considered a forecasting tool, but it's not primarily a forecasting tool. It provides a detailed description of how the markets behave, and this is very important. So the main idea behind the wave principle is the fact that it's governed by the man's social nature, which generates forms. And the forms are repetitive and they have a predictive value. So patterns repeat. Humans are social creatures. They react most of the times into the same way, and that's what creates patterns into the market. If you learn to identify these patterns, you will learn to predict the next movements of the market. The most efficient method to achieve fluctuation and progress in a linear movement, it's the 5-3 movement, because nature follows the most efficient path, and if we are evolving as human creatures and human species, we have to advance, and the most efficient wave to advance is in 5 waves up and 3 waves down. You have to have an advanced movement to be able to make progress, and then sometimes those movements are a little bit aggressive, so you have to correct them. So you will never have an advanced, if you would have 1 wave or if you would have 3 waves, you need 5-wave advancements and 3-wave retracements. Precise degree into the markets is irrelevant. A lot of new traders, they are scrambling to identify degrees and to count every single wave. You will become paralyzed by this, and you would have to let the market talk to you and develop itself to you, because later events will always clarify the degree. So there's no point in looking at the cycle or at the minute or at the subminute or at the minor degree, as long as you know what the overall structures are. Right? Waves are actionary and reactionary. We will get action and reaction, which is basically the rule behind the 5-3 movement. And the function of the wave is determined by its relative direction. All right. Okay. The best approach to the market is deductive reasoning. We are looking at the markets and we are trying to find out, how many wave counts we have, how many are impulsive, what is corrective. Do we have a primary count? Do we have an alternate count? And all of this might be confusing, but the best approach for this is to deduct a reason out of the mess that you see in front of you, and basically you have to eliminate what's impossible based on the rules of the Elliott wave, based on the guidelines, and then whatever will remain in your analysis, however improbable that is, it must be the truth. So the way you look at the markets and the way you analyze the waves is you will look at all the possibilities and you will follow all the rules and the guidelines, and then you will subtract, and whatever doesn't make sense and whatever it's illegal based on the rules, it will leave you with a few counts that must be the reasonable counts, and those are the ones that you have to follow, and then the market will clear itself out in front of you. All right. Unfortunately for many, this approach requires thought and work, and it rarely provides a mechanical signal. That's why you will see many traders saying that Elliott wave is subjective and it's hard and it takes a lot of time and it doesn't provide you with a mechanical signal, and it sure doesn't. But when you see it, when you learn the language, and when you see the whole forest through the trees, you will find out that the markets are extremely simple and they move in patterns and they are repetitive, and all you have to do is just watch them and just be patient, and they will reveal themselves to you. Okay, so these are the basic concepts of the Elliott wave principle. I will go and look at the practical application because that's important. And basically, what it does is the wave principle trains the analyst to discern what the market is likely to do before it does it. Very important point, because this is where the predictive value comes in. It trains the analyst to discern what the market is likely to do before it does it. Once you see and you learn Elliott waves, it might take you a year, 2, 5, 10. It takes a long time, and you are always learning and you are always developing. But once you get the Elliott touch, you will not be able to look at the chart the same way ever again. It will be forever with you. It will give you a feeling of confidence of where you are in the market progress, and it will psychologically prepare you for the fluctuating nature of the price movement. Many people that are learning Elliott come back to me and tell me, man, I cannot look at the chart anymore, and all I see is waves. And no matter how many tools you have in your arsenal of trading, if you start with the Elliott wave basics as the primary forecasting tool in the market, adding little things here and there to help you fine-tune some of the things that you see, it's important. But at the core of your trading style and of your trading development, once you see the waves and once you see the Elliott wave principle in action, you cannot turn back. All right. I'm going to say something here that it's interesting, and it's the hardest thing to believe. The hardest thing to do is to believe what you see, and I'm continuing to develop on that, and all the Elliott wave analysts are struggling with that, and the Elliott wave traders. It's because sometimes you will see the market act in the way it's supposed to, and you will want to see what's not there. But what it's there, it's you have to believe it, because if you have a good analysis, and if the market is correcting and you finish a zigzag or you finish a triangle, you have to believe in it. Okay, sometimes you will be turned away, and you will be, you will lose focus, and you will want to see, for example, that you're short, and then the patterns are clearly telling you that the market is going long. You will look for justifications to be short, and that's a big flaw that you have to overcome. Right. So the wave principle helps by limiting the possibilities and then ordering the relative probabilities of possible future markets path. So you have rules, you have preferred counts, and then you have second best interpretations, and then you have alternates. All right. So they are limiting the possibilities, and then they are ordering the relative probabilities of possible future markets path. I think it's an extremely important point. And then, it kind of goes back to where you're, eliminating the possibilities, and what you have, it's what must be the truth. Okay. So you will see many times that multiple counts may align and offer the same path forward. And this is where Elliott wave is at its strongest. You will have, a primary count, and then you will have alternate counts. But at some point, you will notice that there's going to be a bounce no matter what, because you will have a wave to pull back, or you will have a wave B pull back, or you have a wave Y coming up, or a wave X. So you will know that the market, most of the counts that you have are going to point upwards, and that's when you have the strongest, the strongest weapon towards the market. All right. So sometimes, despite a strong analysis, sometimes there will be no path. You will look at the chart and you will try to identify and scramble the wave counts and the movements, and you will have maybe 5, 6 alternate counts and 5, 6 bullish counts and bearish counts. So when something like this happens, you need to stop and you need to step away and let the market sort itself out. There will be many situations when this happens and you have no business being there. The analysis has to be clear, and it has to provide you with a strong sentiment about what's about to happen. So sometimes you just have to wait for the count to sort itself out. Okay, then the wave principle provides a built-in objective method for placing a stop, and this is important because a lot of other methods don't, and people who end up losing a lot of money. So the pattern that you identify, it is either over or it isn't. So if you have a zigzag, or you have a flat, you have to look at the pattern. You have to know where your stop is. You have to know where your count becomes incorrect. And if it doesn't do what it's supposed to do, you need to get out of the market and relook at everything. You got to wipe everything out. You got to go back to the drawing board and look at the market. So you will know based on the rules of the Elliott wave where to place your stops and how much risk are you willing to take based on your wave count. No other method out there is so strongly in identifying where to place the stops and where to take the targets. Right. The other thing that's important is you will be battling your own emotions. Okay, and trading money and analyzing markets are two different things. So analyzing and making money are two different skills. You will be able to analyze relaxed the markets, and you'll be able to plan and prepare yourself for the battle. But the moment you step and you put money on the line, your emotions will take over, and you will have to stand behind your analysis, and you will have to look at the charts and say to yourself, this is my analysis. I have to respect it. I have to listen to it, and I've done my work. Now it's time for the market to work for me. And this is where your emotions will become more and more under your control. And as time passes and you become better at reading the waves and market structure, you will become a much better trader. All right. So I'm giving you a suggestion, and that is choose the wave principle. You will learn to think properly, and you will be put on a path to investment success. Okay, the wave principle is extremely powerful, and it will help you in your trading. Believe me. All right. So, all right, let's go back and start to look a little bit of a couple of charts and the structures, and see where this takes us. Okay, so if I go back to this quick chart, you will see that we have a 5-wave advance and a 3-wave correction, and there are two types of waves into the wave principle. We have motive waves and we have corrective waves. All right, and everything else, it's a combination of these two. Motive waves are impulsive, and corrective waves are corrective. All right, so let's take the motive waves. And in the motive waves, you have two kinds. You have the impulse wave, and then you have the diagonal. I'm not going to go into a lot of details about what this means. I will make future videos about each one of them and the relationships between them and the fib retracements and all that. But for right now, I'm just going to stay with the basics. So you have impulse waves, and then you have diagonals. All right, the impulse waves, they are all in 5 waves. You have a 1, 2, 3, 4, and 5 as an impulse. There are specific rules that you need to follow. For example, wave 2 can never come below the origin of wave 1. Wave 3 can never be the shortest wave in the sequence. Okay, it's often the longest, but it's never the shortest. And wave 4 never comes into the area of wave 2. All right, it cannot come below the end of wave 1 into the area of wave 2. So these are some basic rules that the impulse wave have. And then there's a bunch of guidelines that I'm not going to go over, but basically this is the main structure of a motive wave. It's an impulse. And then you have the diagonal. There is different rules in the diagonal. These can be two types of diagonals. They can be the contracting diagonal, and they can be expanding. Okay, in the contracting diagonal, wave 1 is the longest, wave 3 is the middle wave, and wave 5 is the shortest wave. If these rules are broken, then you don't have a diagonal. You have something else, but not a diagonal. And into the diagonal, waves always overlap. So wave 4 will enter the territory of wave 2, okay? And basically, it's a beginner move. It's a beginning move. Usually they appear into the wave 1 of a sequence, or into wave A of a sequence. So that's why it's called diagonal. All right. So impulse waves are very simple because they are very clear and easy to identify on the chart. Wave 3s are the longest. You could have extended waves in here. You can have an extended wave 1. You can have an extended wave 3. You can have an extended wave 5. And there are certain variations in the way fib zones react to previous waves. that are giving you confidence in where you are into the structure, right? But these are basically, some of the simple rules and guidelines that you have in an impulse and in a diagonal, right? And then we go back and we look at the corrective waves. The corrective waves are three kinds. They are zigzags, they are flats, and they are triangles. All right, a zigzag, it's a very simple formation that's an ABC, where wave B never goes, above the start of wave A, and wave C always comes after the end of wave A. All right, and this is a zigzag. Then you have a flat, where you have an ABC and just a basic flat, where all the legs in a sequence are pretty much equal. Wave B comes to the origin of wave A. Wave C ends, near or passes the wave A by a little bit. And this is a regular flat. And then you have the triangle, where you have basically a wave A. You have a B, C, D, and E. It's a 5-wave structure. And, they divide themselves into 3 legs. Most of the legs inside a triangle are 3, so you have ABC, 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 and so on. And so most of the legs inside the triangle are zigzags. Sometimes one of the legs, leg C or leg D, will be a complex wave. But that's a lesson for another video. All right. So in terms of the triangles can be contracting. Okay, that's exactly the one that I'm showing you right now. They can be expanding, where the legs actually go out, and then you have a barrier triangle where wave B and D are at the same level, and then you have a running triangle where wave B is higher than all the other ones, and that's about it. That's all you have. You have kind of 4 kinds of triangles. So a lot of details into the triangles. They're extremely nice. It's an extremely powerful weapon to know, and I'll make more videos about it into the Telegram room. Flats, again, they can be, several kinds. You can have a regular flat that I've shown in here. You can have a running flat where wave B is higher than the origin of wave A, but wave C never comes below the end of wave A. And then you have, and this is a very powerful pattern that provides explosive third waves. And then you have what it's called an expanded flat, which is also very powerful. And it's the most common one out there, where you have basically wave B goes above the origin, the start of wave A, and then wave C comes below the end of wave A. So it looks kind of up and then all the way down. And that's a expanded flat. All right. So zigzag are pretty simple. They are just ABC. And then you will have a bunch of combinations, which are extremely complex and, kind of hard to read unless you get more experience. But everything, it's a function of combination between the waves. So you could have you could have a double zigzag that we're going to label it as a W. So you can have wave zigzag, as a wave A, and then you can have a connector wave with another zigzag, which is an X, and then you can go in another leg down in a B, and that's another zigzag that connects to it. Okay, so that's called a double zigzag. You have basically a W, and then you have an X, and then you have a Y. And then you can have a double tree where you have a connection of a zigzag and a flat, or you can have a zigzag and a triangle. You can have a flat and a triangle. So these are all kind of complicated corrections, and you need to learn to identify them. And the more you watch the market, the more you will learn about them. Sometimes they can become triple combinations. You have zigzag, flats, triangles connected by zigzags and flats. And, those are very messy and hard to read. But again, with experience and patience, you will learn to identify it, and maybe just wait patiently until that's over. But nothing in the market, it's unreadable. Nothing it's, not supposed to be there. And all you have to do is just be patient and learn the principle. All right. So I will show you now a couple of examples, and then we'll call it done. But you will see how easy and nice it's to identify some of these patterns. So if you look here, I have a chart of the euro dollar, and I think it's from a couple of years back, 2-3 years ago, 4-5 years ago, I think. I don't remember, but what I've tried to find out is a nice, clear, impulsive move. And if you look at the structure, you will see that everything you need to know about the Elliott wave principle, it's on this chart. And here you have a clear impulsive move where if I start at the bottom left of the chart, and if I look at my green count, you will see 5 waves. And then within these 5 waves, you will see corrective waves, and then you will see more 5 waves, and then you will see more corrective waves. And if you look at the overall structure, you will see one big impulsive wave, right? So this is what it means when we say that the markets are fractal. These patterns are repetitive, and this is where R.N. Elliott was a genius by identifying this, because if you start with a daily chart or a 2-day chart like this is, and then you go to a 4-hour chart and a 1-hour chart and a 15-minute chart and a 1-minute chart, you will see these patterns over and over and over again. And this is what makes it powerful. Now, you don't have to trade on a 1-minute chart. You don't have to trade on a 1-hour chart. You don't have to trade on a 4-hour chart, right? You could be a daily trader. You could be a weekly trader, or you could just take 2 trades a year. But it's all about your risk tolerance, preference, time that you have, how aggressive you are, how much money you want to make, how much money you want to lose. With time, you will learn to prefer a time period after another. So if you look at this, you will see a wave 1 in a bigger sequence, right? This is a 2-day chart. If I look at the monthly chart, this wave 1, it will be very small. But on a 2-day chart, it appears pretty big. It's clear. It's nice and impulsive. The markets are moving from the bottom left of the chart to the top right of the chart. So you have the wave 1 in blue, which is of a certain degree, and then you have 1 green, 2 green, 3 green, 4, and 5. So as per the Elliott wave rules, we know that wave 3 of an impulse lag can never be the shortest, and it is not. It's a long, big wave, and that's how you learn to identify them. Now, wave 4 here does never come into the area of wave 1. Wave 2, it never goes below the origin of wave 1. Okay, so I can clearly see that I have an impulse in 1, I have a 2, I have a nice 3, a 4, and a 5. All right, you can see the impulse lags. Wave 1 is impulsive, it goes up. Wave 2 is corrective, it comes back and retraces. How does it retrace? It retraces as a flat correction. What type of flat is this? This is a running flat, because wave B goes above the origin of wave A, and then wave C never comes and passes wave A. So we have a running flat. Running flats are extremely powerful because they will tell you that wave 3s are going to be strong and impulsive, and they will move with vengeance to the top side. So now you have a strong wave 3, then you have a wave 4 pullback. This wave 4 up here, what is it? It's a zigzag. Okay, by the guidelines of alternation, if you have a flat in a wave 2, more than likely in a wave 4 you will have a zigzag. So the market gives you power in identifying what this is, and you will learn to understand that wave C will travel a distance almost equal with wave A, and then you will know with a very high accuracy where this wave C will end before you take your trade. So this is where the wave principle becomes very powerful. And then you move in a 5 wave again. Okay, this is a corrective move, and then you have an impulse move. The impulse move needs to have 5 waves within it. So you have a wave 1, a wave 2, a wave 3, and a wave 4, and a wave 5. And this repeats again. You have a correction in a wave 2, you have a correction in a wave 4. Same thing for the third wave. You have a corrective move in a wave 2, you have a corrective move in a wave 4, you have a clear 5-wave move impulse in a wave 1. Okay, you can go inside here and count it. Okay, you can have a 1, 2, 3, 4, and 5. Wave 1, it's extended. It's bigger than third, but it doesn't matter. Third, it's smaller than 5. So it's not the shortest wave, but it's, it's not the shortest wave, but it's longer than 5. So it qualifies and it doesn't break any rules. Okay, now look at this. In a wave 1, you have a leading diagonal. We were talking about a leading diagonal. They appear from the bottom. They are very powerful because if you learn to identify a leading diagonal, you will know more than likely that wave 2 will have a very sharp pullback. Okay, wave 2s after a leading diagonal, especially wave A of a leading diagonal, comes almost always to the 786 Fibonacci retracement of a wave 1, 618 at the minimum. If it doesn't come that much, then it is more than likely not a leading diagonal and you have to look somewhere else. Right? So this is basically And then there is a bunch of Fibonacci relationships between these waves and price projections, and you learn where to place your stops. And like I said, if you just look at this example, everything that you need to know about the Elliott wave, it's in this. It's right here. All these patterns that are forming are repetitive. Okay, and I cannot stress you enough how clear and concise, for me at least, this is when you look at the market. So you have to take this and apply it to any other market out there, and you will find these patterns. Okay, I'm going to show you one more example, and that is in Bitcoin. And basically, we are looking at the nice advance into the market since December 18. I talk about this a lot in my videos, and if you see all my other YouTube, they are basically, kind of connected to this pattern. I was talking about the impulsive move into the Bitcoin and about, the upcoming, price projection and target that we are going to have ever since we were in the second wave pullback. And most of the guys that were following me back then, and we were looking at these patterns, we've enjoyed a pretty nice rise into the price of Bitcoin up into the 14,000. So when you see something like this and you want to invest or put money to work, these are the types of moves that will help you really solidify your account and will keep you out of trouble if you know how to stay out of trouble when you have corrective moves, basically like the ones that we are in since June, middle of June of this year, because we are in a corrective pattern. All right, so basically one more time here, you can see off the lows back in December of last year, you can see a clear 5-wave move up in a 1, 2, 3, 4, and 5. You have a zigzag as a wave 2, you have an AB ending diagonal in wave C, and then you have again a 5-wave move up in 1, pull back in 2, you have 3, you have an alternative wave 4 here, again as an ABC, right? So you have another running flat down here in a wave 4, you have a zigzag in a wave 2, again, same rules like in the Euro-dollar chart, and then you have a nice rise in an extended 5th wave up, right? I think wave 5 here is bigger than wave 3, but wave 3 is never the shortest. Wave 1 is way smaller, right? So we're not breaking any rules, we're not breaking any guidelines here, and then you have a nice 1, 2, 3, 4, and 5 for a wave 3. And then again, what you have here, so you can look at this pattern, the 4 orange as a running flat, and then you can look at the 4 blue as a running flat. These two patterns are the same. They go up, come here, they never come below, and then we shoot back up higher. When you see a running flat, you will know that the market is about to scream higher. When I say that you have to believe what you see, this is what I mean. Because if you're short here and you see this kind of a pattern, you got to get out and go long. Okay, and you know exactly what your stop should be, and these are going to be lessons that I'm going to put up into the Telegram room on where to place your stops, where to place your targets. But basically, this is the power that the Elliott wave has. And then you have a final blow up top here in a wave 5. Clear impulsive move. You have a 1, 2. This wave can be a 1, 2, 3, 4, and 5, and we're 1, 2, 3, small triangle 4, and a final blow off in a wave 5. So completes to wave 1, and then once you recognize that this is done, you either step away or you start learning the inside, you start trading the inside of these moves. But this is where the market becomes very painful, because every gain that you made up here, you can give it back into this correction. Okay, and it takes you about 2-3 months of gains just to give it back in a choppy environment in the next 5 or 6 months. So please be careful when you trade. And if I were to leave you with anything, is just so you know, the trading capital is like a bar of soap in the shower. The more you use it, the thinner it becomes. So be careful with your trading capital. Learn to identify the patterns. Learn the Elliott wave principle. Stay relaxed. Watch the markets. Never rush. Never hurry. They're always coming back. You have extraordinary patterns. If it's not in Bitcoin, it's in Forex market. If it's not in Forex, it's in the commodities. It's in the equities markets. It's in the bond market. They're everywhere. And if you are relaxed and look at the daily chart or the 4-hour chart or a half-a-day chart, you will find these patterns. You will become very strong as a trader, and you will make a lot of money. Okay, so I will leave you with that, and I hope this video finds you well. I hope you like it. Subscribe to my channel. again, come and visit us into the new room I will create. I also have a free room, with a lot of crypto analysis and a lot of charts. There are great guys out there, and I thank you guys for watching, and I wish you well in your trading.